Hey everyone, welcome back to another episode of Stock Analysis. And I'm here today to talk about a company that has been raising my attention, and I am very curious about where this actually goes. And that company is Duolingo. I'm not going to get into exactly what Duolingo is. Uh, I'll talk about it a bit here, right? It really is a app to learn languages, right? That's what it was built at, and it developed a cult following with Duolingo Owl and all the memery that happened with that. So really the question, it has been, well, there's not a question there, but it has really been, the stock has been really devastated recently, right? It's down a lot from its all-time highs. So I figured this is probably not a bad time to take a look at it. I'm not going to get suckered in by the drop in price. So let's take a look at what exactly is the company, what exactly it offers us, and from there, is it priced cheap or expensive, right? It doesn't matter how much it's grown or how much it's dropped. If it's still a favorable trade, or a favorable position, there's no point in not taking it. So to understand more fully about this company, right, we have a bunch of headwinds and tailwinds coming in for this essentially uh, education company, right? You have a lot of Chinese companies, obviously, given they are in China, right? The competition there with an American-based app-based company is not going to be as strong, but that is there. We also have things like Chegg and Coursera. Once again, these are really things that I don't see as being much of competitors to Duolingo as they make themselves to be, or that as much as they want to be, right? Chegg and Coursera are really two things that for students targeted towards students to have them learn things that teachers assign them versus Duolingo is more about learning on your own and being able to essentially learn on your free time, right? You can target basically anyone. It's not just the students. Retention rate, valuation, those are kind of intrinsically going to be a question to Duolingo because of the way they have the business model set up, being a subscription-based service. And obviously, being traded on the stock market, you are prone to overvaluation or undervaluation as things ebb and flow. Macroeconomic headwinds, right? That's also definitely something, right? Let's say you do have Duolingo. How much are you going to be willing to actually go out and sustain Duolingo and pay for that service if, say, your job isn't as steady, right? Is that going to be one of the first things you cut out of your life? Or is it going to be something that, because the price point is well worth it, it's not going to be something that you take out of your life, but it's something that you actually use more as something to develop more skills? That could be a question there, right? Tailwinds, right? Tailwinds are pretty interesting. They have grown user base, obviously, especially recently, they've exploded. They're not necessarily limited languages, and this is really where I think it is very, very important for some people to understand. I do see Duolingo having a lot of different avenues to go for trying to expand their selection of education when it comes to when it comes to basically anything. You got language, you can have math. I know a bunch of people actually pay for services on like chess.com, so there's no reason why they can't go into things like chess. Or if they wanted to, there's no reason they can't go into things like that, like boot.dev does, right? Coding. You can learn other skills in there that are not just that type of language based items. And if they're able to essentially gamify that, right? That makes them a lot stickier as an application and a lot easier to retain users, even if there are macroeconomic headwinds, as it would be justifiable to keep a service like that to keep learning and improving your skills. So AI is one of the things that I do think is a tailwind for them, as it is going to help them retain users in the sense that there's going to be able to give notifications to be able to bring users back on the daily, and the more users use it, the more it becomes an angry habit, the less likely they're going to want to cancel. The owl, and as I put there, is definitely something where you do see a very big tailwind in my opinion because it's such a well-known brand, right? It's so well known, and you see the owl, you think, oh, that's Duolingo. It's gotten a cult following. And this is possibly the first time where the image here actually is depicting where the opportunities are for this company. I do think for Duolingo, the opportunities are essentially to the moon. I do think the recent fears are overblown. But let's just see how the fundamentals are holding up, and I'll give you where I think the growth is going to be coming from. So profit and revenue history. So earnings, I'm going to be looking at this as a non-GAAP, right? If you look at the GAAP earnings, sorry, I'm going to be looking at this on the GAAP earnings side. If you look at it on the non-GAAP earnings side, they actually have positive earnings every single quarter since they were public. However, looking at the non-GAAP side, we do see that the revenue growth has a 26% median year-on-year growth with the 24% CAGR, which is really fast. And the most recent year is actually at 36%. So it has been speeding up, and I do see them being able to speed this conversion up as they are a subscription service, which, as we all know, those are very sticky services. And because it is a sticky service and they're probably going to be able to convert more people from just simple one-time like freemium from the freemium model into the premium model, they're going to be able to put that in there. So I do see that revenue speeding up as more people are jumping into the platform, as more people want to learn more and more, and as they're able to branch out into other departments for different types of learning opportunities. So I did say that I didn't care that much about the earnings because I do think the earnings are a bit iffy on this one for some type of analysis. So especially if you want to look at a price PE, right? Because they don't have a history for PE. So what I'm going to be looking at essentially is I'm going to look at them and say, let's look at their sales. So obviously here, 100% margin at the bottom here doesn't make any sense, but this is just so that I can use a price to sales model instead of using a PE model. So currently their PE price to sales is around a 15 to 16, and I see it maybe contracting to a 13 or 12. Contracting down to that point essentially is just saying that you're contracting down to slightly slower growth, right? And even then, this is right on the conservative side, especially if they do have that 36% revenue growth, can expect a much higher price to sales than 13. But even there, we get an intrinsic price today of about $510, which is a bit higher than where it's trading at now. So not a bunch of this growth isn't baked in yet. A bunch of the fear has really driven people out of the stock. So let's take a look at the free cash flow, right? One side is just from the pure earnings. Okay, how much money are they actually going to be able to bring back into the company? So the free cash flow growth for how long they've been out has been 100% as the median, 100% plus percent on the CAGR. So basically every year they're doubling their free cash. Obviously last year they were only able to grow their free cash flow by 50%. I say that as only as if that's super impressive for a company to do, but that's just how it's been. So I mean, that's an amazing feat to do, and I do see them being able to sustain that, especially with their really fast revenue growth and their earnings continuing to build up. The price of free cash flow, right, has been a median of 63 with an average of 65, which is a bit high, but it's not unreasonable. So where do I see this company actually going with all the tailwinds and headwinds? Well, 40% growth, I do think it is very, very much understandable. And if we give it a 30% price to free cash flow, which is actually so much Netflix, and to be fair, this is going to be a company I do think is similar to Netflix. Like, I don't see any real competitors to Duolingo in this education sphere. You can't really say things like Chegg or Coursera are competitors. You can't really say something like Khan Academy is competitor. You can't, and there's no good comparison to it, right? There's no other. Yes, they have a lot of competition in the digital education space, but there's nothing like this, right? There's nothing like Duolingo in the sense of an app, making you essentially play a game to learn. There are definitely people who wanted different types of education methods that try to do something similar, right? I can think of Boot.dev, which is doing a lot of advertisement from my side of the internet, and they are advertising something similar, right? We're going to gamify learning, but Duolingo's already done that, and they've done it to a much better scale, right? So both of these together, really, you give an intrinsic price of almost $600 today, and here's the other kicker, right? Duolingo as a very early, like starting company, right? They have no debt, essentially no debt. They have $2 of debt per share, and that is basically non-existent, or it is a rounding error in terms of how much they're intrinsically worth when it comes to this type of free cash flow projection. So, what is my rating? From all the glowing things I've said about it, it's probably pretty easy to see. I think this is the vibe. This company has been pounded for no reason, and it really has really good fun. It has good fundamentals. I do think the tailwinds are there to propel it forward. Yes, there's negative sentiment right now, but this is the best time to buy a company when there's negative sentiment, but there's nothing deteriorating about the fundamentals. So, all in all, yes, I do think target price for next year, I wouldn't be surprised if it doubles. Like that's where I would have it at fair price. So, all in all, this is a very strong buy, and please let me know where I went wrong in my analysis or where you think I went right. Let me know if there's any other companies you would like me to cover. And if you enjoy this, subscribe, leave a like, or whatever you want to do. Thank you guys so much for coming to hear me essentially rant about a company that I found and I think is pretty undervalued. Thank you and have a great day.